Hi there, welcome to Market Call. Kim Bolton is on our show today, portfolio manager at Black Swan Dexteritas. He'll take your calls, emails, tweets and video questions on technology stocks. We don't want to hear about any junior gas producers today. Call us toll free, 1-855-326-6266. There's the email address, marketcall@bnnbloomberg.ca. Kim, great to see you.
Great to see you, Andrew.
We'll let you preen for a while here. So you were in Red Hat, let's put up a 1 year. I think it's RHAT, getting taken out by IBM at a huge premium.
On Sunday night, I was actually over in Stratford, and the news came across that the IBM was buying them out at 190. The top this year was 177. So we've actually carried it for a long, long time. Initially got into it around $63.50. So as we were just talking beforehand, Monday morning I came in, even though the price was 190, I sold it at 174.25, and there it is, 170.
So it was one of your top picks previously.
Yep.
And just remind us, is this a move of desperation by IBM because their revenue has been falling?
Yeah. I think this is going to be the legacy for Ginny Rometty, the CEO there. You know, they have a lot of legacy hardware stuff out there, and they tried to break into the cloud business. This is a perfect sort of niche in the open source side, so it's perfect for them. And I really don't think there's anyone else out there that's probably better suited to it. As long as Ginny and the IBM team let them do their thing.
And that's the thing. Yeah, they were at pains in the news release to say we're going to stay open source, but I'm sure the middle management bureaucrats at IBM will try to. It's always about empire building.
They'll let them do their own thing for a while, and hopefully they let them do it for a good long time.
So we did see the Nasdaq get into actual correction, a 10% decline.
Yep.
How are you playing the Nasdaq right now?
Well, it's interesting. You know, you come into the end of September, beginning of October, and everyone was sort of thinking maybe you'll just have a typical pullback, you know, sort of between 3 and 8%. But it gained some momentum, and all of a sudden we entered into correction territory. But then everyone started talking about, you know, is this going to be one of these systemic bear markets? And the ingredients for that are just not there. So you went into correction territory, you had a bit of a snapback yesterday and again today. I think it's going to take some while to digest that pain that we've had over the last 4 to 5 weeks. But I still think you're going to see new highs. So the pain is probably
for the big U.S. techs, in other words.
Absolutely, absolutely. But you know, the big U.S. techs are down anywhere from 15 to 30%. So they've got a long way to claw themselves back. That's why it's going to take a long time.
Do you think Facebook will recover over the next year, get back to its former glories, for example?
In the next year?
Yeah, I mean that's a tough one because there's so much political pressure on the company.
I think you could very well see, you know, a print of 200 on it within the next year. Right now, I think it's sitting around 150-ish or something. But yeah, you know, they've been in the limelight of all the cybersecurity and databases and GDPR and so on, and you know, that will come off the front page and they'll get back to doing what they're doing. You know, on the advertising, they reported last night, the advertising side was a tremendous growth. Again, 30% growth year over year.
Yeah, I don't think the user metrics have, well, they flattened off in the States, the growth in users.
Right. The daily and the monthly active users are only growing around 10%. But, you know, the bottom line, but this is like a lot of the market right now. You know, everyone seems to be beating on the earnings side, but the revenue is a little bit difficult.
Sure. Now you have a chart for us that shows strategic tech trends over the next 1 and 2 years. Tell us what that chart is telling us right now.
I'm glad you put this up. Thanks, Andrew. So this is, you know, a lot of our investors and people that we talk with want our sort of strategic vision of the technology arena. And so I'll just quickly go around it.
Okay.
You have a bullseye, that's the digital business. That's what it's all about. You have three themes around digital business, and then you have 10 trends that go around that. So the bullseye, you know, technology is all about digitalizing business. That's what it's about. But then you have, when you go from 1 o'clock to 4 o'clock, you have the merging of the real world with the virtual world. Within that, there are particular trends, and they change over time. But right now, the big trends within that merging of the real with the virtual world are 5G deployment, the Internet of Things, and digital twins. Digital twins is just taking objects and putting them on screens, and you can manipulate them and make things move quicker. Going from 4 o'clock to 8 o'clock, it's intelligence is everywhere. It's business intelligence. But this is where the data analytics, you know, the whole evolution of the Excel spreadsheet into artificial intelligence is really ballooned over the last number of years. And this is where you have the software application people, you have the internet software, and so on. And then from 8 o'clock up to 12 o'clock, this is all the electrification and digitalization. But that's where you have the autonomous vehicles, you have the robotics that's going on, and then the whole electrification and batteries and so on. Those are very, very strong trends that have long runways.
We will be back with Kim Bolton. He's portfolio manager at Black Swan Dexteritas. The topic, technology stocks, 1-855-326-6266. Michael in Montreal, go ahead, please.
Good afternoon, gentlemen. I'd like to have a guest, JD.
He's breaking up there, I think JD.com.
JD.com. So we don't own it. We find it a little expensive versus some of the competitors out there, so we just sort of passed on JD.
And what do they do? Can you remind us?
JD.com is involved in sort of the hardware, sort of internet software sort of side of things, and there are more dominant leadership players in that side of things.
Ali in Toronto, fire ahead, please.
Hello, sir. Good afternoon. I have a question on Micron technology. What's your outlook on the stock, and also does it have anything to do with China and higher interest rate in U.S.? Thank you.
Thanks a lot.
Thank you very much. Is it Henry?
Yeah. That was Ali.
Ali.
Yeah.
Thanks, Ali. Micron, we own it. It's not as large. We took a bit of profit on it. It's an interesting space. So Micron is involved, of course, in the semiconductor side, but more in the digital. So there are sort of three parts of the semiconductor suppliers out there. There's the digital, which is like Micron. There is the analog, which would be examples like Infineon, and then there's the field programmable side, which is Xilinx. The digital side that Micron is involved in is very, very cyclical, and there are some supply pressures going on in the digital side. So we've underweighted the analog side, and of course the field programmable, and underweighted the digital side of it.
Okay, so sorry, what was your overall view then on Micron? Would you be interested?
Yes, we still hold on to it. We look for places to actually buy it. Oh, Ali, you talked about China and the interest rates. Not so much on the interest rates, but certainly on the China, because China is such a large producer, and they've flooded the market, particularly on the digital chip side of things. And so that's what the pressure has happened on Micron.
Henry in Hamilton, Ontario. Go ahead, please.
Good afternoon. Thank you for taking the call.
Pleasure.
Two requests. Number one, may I have your assessment, please? PayPal. And secondly, I already have a small position in Visa. Would adding PayPal to a portfolio of 20 stocks be reducing my diversification? Are they too much alike, or could a portfolio of 20 hold both Visa and PayPal?
Oh, that's
Thank
interesting. Yeah, thanks.
That's interesting. This is all on the fintech side of things. Yes, we own PayPal. We have a position in PayPal of about 3%, 3.1%, but we also own Visa. In Visa, we have a position of 5%. So can you hold both of them? Actually, yes. And on top of it, we own MasterCard. You know, this whole fintech segment, and they're all different. You know, Visa is more on the cards, but then PayPal is more on the mobile, and they very much compete with the likes of Square with cash. PayPal bought Venum out there about a year and a half, 2 years ago, have really leveraged that side for the mobile, for the e-commerce side of things. So, Henry, yes, there is definitely room for PayPal and Visa. And we also find a balance in there with MasterCard. Those are really sort of the leaders that we see on the e-commerce side.
Mary in Burlington, Ontario. Go ahead, please.
Hello, gentlemen. Thank you for taking my call. Happy Halloween.
Thank you.
I'm wondering about Activision Blizzard. I just picked up a little bit, and I'm wondering what you think of the company and their future prospects. Thanks very much. I'll hang up and listen.
Thanks, Mary. Yes, we own Activision Blizzard. We used to own a competitor of theirs, which is Electronic Arts. Electronic Arts reported last night, and I saw them off about 4 or 5% because they actually lowered their guidance going out into 2019. However, Activision Blizzard, it's why we own Activision Blizzard versus Electronic Arts, because the runway and the diversification that they have of Activision Blizzard, we believe, is a lot better than that of Electronic Arts and even Take-Two. Activision Blizzard is also involved in with Tencent in the whole esports side of things, which is just absolutely ballooning. I don't know if you had the chance this past weekend to go to the video conference down to at the Metro Convention Center.
Video game conference, yeah, quite the festival,
phenomenal. I felt a little out of place because the average age there was probably around 20 or 21, but it was just shoulder to shoulder, and it just shows the mass of esports, and Activision Blizzard definitely has a strong leadership in that.
We'll be back with Kim Bolton, Portfolio Manager at Black Swan Dexteritas. He's answering your questions on technology stocks. Give him a call, 1-855-326-6266. Okay, so let's get on. We've got Kim Bolton on Market Call, and he's taking your questions on technology stocks. Jerry in Vancouver, kick us off here, please.
Good morning, gentlemen. Can I please have your view on Microsoft? Would you be a buyer of Microsoft? Is there any growth left in terms of share price? And what's your prediction with Microsoft's technologies? And Andy, could you give us a street consensus, please?
For sure, Microsoft it is.
Thanks very much, Jerry. Yes, I would add, because we actually added to Microsoft recently in this swoon. It's interesting in the swoon that has happened that the last remaining sort of leaders out there that have really been punished have been Microsoft and Amazon. And it sort of trickled down, and then finally, as the market deteriorated, they went after them. And it gives you an awesome opportunity to actually buy in. I'd say Microsoft is probably number 6, number 7 holding within our portfolio. We recently added to it. Why? Because when you look at our portfolio, about a quarter of our portfolio is dedicated to software application. And in the software as a service side of the business, Microsoft is the leader. They own 16, 17% of that software as a service. They're a leader out there. Behind them is Salesforce, CRM. And their software as a service side of business is a huge contributor to its Microsoft's 45% revenue growth rate year over year. So yes.
It's a gift that keeps on giving, and it can't be pirated in the same way, presumably, software as a service.
That's right. You know, the whole change that they went from licensing to subscription really opened it up to so many more people out there. And, you know, and on top of that, Jerry and Andy, I didn't mention about the Azure, but, you know, Azure
that's their cloud business?
That's their cloud business.
Okay.
And they're really running sort of neck and neck with Google now. You know, Amazon Web Services has a massive lead over the two of them. But the Microsoft Azure has really sort of climbed up. And it's just another one of the horses that Microsoft has in the race.
Let's just see what the consensus is on Microsoft. There are 34 buys, only one hold, 2 sells. Average target about $126, and the stock is only about 106 right now. So the street loves Microsoft. Deborah is standing by in Okanagan Falls. Go ahead, Deborah.
Oh, hello, Kim. Congratulations on your big score there. My question today is on Intel. I know their third quarter results came up, and I believe their sales were up about 19% from the previous year. And they also projected that they're expecting a sales increase in 2018 from $71.2 billion from their forecast of $69 billion, along with an increase in their EPS. I bought in at $49, and I'm wondering what you think about this stock. Is this an entry point, and do you hold it in your portfolio?
Intel.
Yep. Thank you very much, Deborah. We did own it. We actually sold out of it, I would say about maybe less than 6 months when, on the previous earnings, they disappointed. They gave lower guidance. The CEO got caught up in this internal scandal. We had some good money in it, and we just didn't. We just decided to get out of it. However, the space that they're involved in is very, very strong, all the way from in the chip space. But we have a lot. Intel is more involved in the analog side. It does have a digital side. And so it's more skewed to the analog, and so
analog. I thought everything was digital these days.
No. So a lot of the chips that are going into the autonomous driving are actually analog, and then on the digital side, that's the whole NAND and DRAM, the memory side of things.
Oh, I see. Okay.
Yeah. Mind you, the Intel fellows would tell you that they're very involved in the DRAM side of the business. I have nothing against them, and if you're in it, I would encourage you to stick with it.
Okay. Let's head on now. Evelyn in Lethbridge, Alberta. Fire ahead, please. Hello, Evelyn or Evelyn? Not hearing the caller. Advanced Micro Devices is the question. Intel to Advanced Micro.
Yeah. They just got punished last week. You can see it there, because they actually again lowered their guidance, and it's interesting that they did, and we don't own it. We do own a competitor of theirs, which is Lam Research. The other competitor is KLL Tenor, who actually just reported the other day, and very differently from that of AMD, they gave very good guidance. The reason we like Lam Research is it's just cheaper on a price earnings basis. It's running at about 5 times versus KLA, which is about 7 times, and then AMD is up at it's probably come down, but it was up around 9 times. And you can see why they actually brought it down when they. But if you can get it down sort of within that sort of 5 to 7 times price earnings, it's probably a good choice.
Okay, let's head to Thornhill, Ontario. Go ahead, Joe.
Hi there, guys. I wanted to get your take on Oracle. I was thinking maybe of selling it and going into Microsoft. Okay, thank you.
Right. So Oracle, would you recommend a switch into Microsoft?
Absolutely. We don't own Oracle. And Oracle is very much like Microsoft because they have a runway that is going down the cloud stream, and then they have a runway going down the software as a services side. And definitely Microsoft has a leadership there. And so, yes, I agree with you. I wouldn't go short Oracle, but I would stick with the Microsoft.
Okay, stay tuned. Past picks are coming your way next. You're watching Market Call on BNN Bloomberg. Was on our show August 29th of this year. So it's a very short period. And of course, it's been tough with that October sell-off. Workday, this one down 13% over the period.
Yep. And we haven't added to it. But, you know, it's hard to believe that I actually say this, but 13% isn't so bad considering there are companies out there that are between 20 and 30% down, so there have been people actually nibbling at this. We still own it. It's not the largest of our positions. We own 1.7% within the portfolio, but it's down 13, so we probably had about 2%.
Okay, and what do they do again?
They're again involved in the software as a service, software application. They initially came out and they had a gangbuster software that was used by a lot of human resource shops around the world. And then they added to that of actually bringing in a financial sort of accounting software as a service that is widely used. It's sort of like a QuickBooks, and it's just ballooned. So tremendous company. We don't buy things for takeouts, but it would be a good candidate as a takeout. And it's interesting when you look at the market and the way the market has actually come down, especially with IBM buying Red Hat. You can see a lot of the movement that has happened over this week has been in the software as a service because they know that there are candidates in there as takeouts.
Alphabet, parent of Google, off 13% over the period.
Yeah. Alphabet, it's cheap. It's really cheap when you consider where it's been, but it's actually trading at 20 times next year's earning minus cash. And they have about $107 billion in cash. A lot of people complain about that they hold on to this cash, that they're not giving it back in dividends or in buybacks. But they'd be definitely one of the people that would be out there looking at the software as a service candidates as acquisitions. You know, the big behemoths who are carrying all this cash say time and time again, going into the fourth quarter and the beginning of 2019, there's going to be a lot of M&A activity that's going to be going on. We think it's going to happen within the software as a service side.
And then Fanuc, the maker of robots.
Yep.
This one down as well.
This one is down 11%. We own, this is in the robotics side. Japanese are leaders in the robotics side, and there's two of them. There's Fanuc, and then there's Yaskawa Electric. And it's very cyclical. It's almost cyclical like the chip business, where there's oversupply, undersupply. And those cycles usually happen within sort of 7 to 10 months. Right now, we're on the nine month where things have been coming down because there's too much supply going in. So we think this is a fabulous opportunity to actually buy in to either Fanuc or Yaskawa.
Right, and so the robot, you would think robots wouldn't be cyclical. You would think, I mean, obviously companies are investing for decades in new manufacturing.
Right, but Andrew, the biggest buyer of the robotics, who would you think? It's the automotives.
Oh, of course, yeah.
The automotives. And so the automotive industry around the world has really taken a dip over the last few months. And now they're starting to come back.
Right, yeah. Concerns over Chinese slow vehicle sales is one thing.
Yeah.
Okay, we are going to take a break. Kim Bolton is talking tech stocks today. Give him a call, 1-855-326-6266. Eugene in Maple, Ontario. Go ahead, please.
Yeah, I would like know your view for the Square Inc. SQ US. Thank you.
No problem. Thanks very much. The payments company.
Yeah. This plays in the same space as what we were talking about before with PayPal, and PayPal has that product called Venmo. And Square's version of Venmo is called Cash. Now, if you go back, earlier this year, there was a study done, it was out of the iPhone App Store. Cash was actually the #1 finance app that was bought on the iPhone App Store. And so it's really given it a great legs up for the small and medium-sized retailers. And it's all about their sales force getting out there and getting their terminals in to adopt Cash, the Square version, out there. CNBC actually claimed recently, it was in September, that 33.5 million people actually downloaded Cash. And if that's true, they actually will have more users of Cash than Venmo, of PayPal's Venmo. So it's really a horse race, and that's why, although Square has been punished in this recent swoon, it's a great opportunity to buy it. Have we bought it? No. We got it all sort of covered with PayPal.
Peter in Vancouver, go ahead, please.
Thank you for taking my call.
Pleasure.
Kim, your expert opinion on BlackBerry. Fairfax also invest heavily in BlackBerry because he believes in John Chen. And John Chen will be rewarded handsomely if he can do a great job. Thank you very much.
Thank you, Peter. Andy, can you pull up the chart there?
Let's have a look at BlackBerry. Okay, over the past year or 5 years?
Over the last year.
There's the 1 year, down 15-16%. Yep.
Yeah. And so it's currently trading at around 12. So I guess it would go back a year because we actually bought it off, and that's on the TSX. So we actually bought it about a couple of years ago down at 8, and we sold it up at 11. We just didn't get back in. We made some good money at it. And then we just found over the course of this year that it was sort of dead money. I don't have anything against it. It does have a tremendous product, particularly servicing over into the autonomous driving side that was very, very competitive, although there's been a lot more entrants coming into it. So we did own it. We don't own it now. And now that it's down around 12, which would put it under 10 on the NASDAQ, I guess, it's probably worth taking a look at.
Peter, thanks for that question. Smita in Woodbridge, Ontario. Go ahead, please.
Yes, good afternoon. Thank you for taking my call.
Pleasure.
I have a question about Tesla. It's a new technology. And last earning day shows they had made some money on per stocks. But there was so many news going up and down. So what do you think? And if you buy the stock, what do you watch? What kind of news that effect to this stock. Thank you very much for taking my call.
Okay, so Tesla.
Thank you very much, Smita. We don't own it now. We're a hedge fund, so we can go long and we can go short, and we've done both with Tesla. And you can do it both ways, and you can make money both ways, just purely off of the volatility. Smita, if you look at the stock, certainly in the last 6 months, and it might even be in the last 4 months, it's been all the way up to 372, and it's been all the way down to 242. Tremendous volatility. And it's all off of headlines that come from Elon Musk. Now, we don't own it. We do trade it. But it's never sort of a core position. But we do own the business, the arena that Tesla is involved in, particularly on the supply chain. We mentioned before about the robotics of Fanuc and Yasukawa, and certainly into the chip business, a fantastic company out of Germany called Infineon that services into the autonomous vehicle side with their analog chips. And so, Smita, we don't own Tesla. It's a great trading stock. You sell it up at north of 350, and you buy it south of 275, and that's how we sort of trade that stock.
Okay, Ram in Calgary, go ahead, please.
Yes, could I ask about Applied Material? About a year or so ago, they used to say that rather than chip manufacturers go into equipment manufacturers like Applied Material, but in 1 year it has gone down to half the price of what it used to sell for. If you own this stock, sir, would you get rid of it or switch into something like Google or Alibaba? Kindly throw some light on it. Thank you, sir.
I think we had a call earlier on this, but it's all part of the semiconductor ecosystem. So AMD, KLA, Lam Research, they're the equipment guys. And then you have the digital, the analog, and the field programmable side. So we don't own any of the equipment players. We did own Lam Research because it's one of the cheapest ones. So if you're going to buy one of the equipment suppliers out there, I would suggest instead of AMD or even KLA, I would suggest Lam Research.
Okay, that would be just on valuation in this case.
That's right, and they're cheap. They're cheap. They're running at single-digit PE multiples on next year. But because of that, the whole semiconductor industry is very, very cyclical. Now, if you talk to some of the sell-side guys out there, like JP Morgan or Jefferies, that cover it very, very well, they're very bullish. But then if you talk to the research companies like IDC or Gartner, they're not.
Okay, one has something to sell, the other is just marketing research. Yeah. Okay, we're going to be back with Kim Bolton. He's answering your questions on tech stocks. 1-855-326-6266. Terry in Bancroft, Ontario. Go ahead, please.
Hi, Andy and Kim.
Hi.
Thanks for taking my call.
A pleasure.
I was happy to hear your comments on both Alphabet and PayPal. But my question today is on Cisco. Could you give me your insight into Cisco going forward? Thanks so much.
Cisco. Thanks very much, Jim. Yes, we own Cisco. It is the
I think we've got Costco up there by mistake. We'll put up old Cisco in a sec.
Yeah.
Yep.
It's our fifth largest holding in the portfolio. And we've sort of built it up. We started down in sort of this is off the U.S., I don't know, around 37, 38. We bought it up to about 42. Here it is around 45, but it's actually come down quite a bit. The reason that we actually bought Cisco, because they have a lot of legacy sort of routers and hardware business. However, if you recall that those sort of themes and trends that I talked about at the beginning of the program, and one of them was up at sort of the 1 o'clock stage, which was the 5G deployment. So there are the telcos that are going to be involved in that, but Cisco is making so much hay with the 5G deployment. And this is why it's really got a leg up.
And this is the new mobile technology, which is vastly more complex or more powerful.
It's more powerful. It's faster. It'll be more broad. You know, when you walk in buildings and you can lose a signal, with 5G you won't have that. It'll all be modules and so on. You'll be able to do it everywhere and faster. And one of the biggest suppliers for this, not surprisingly, is Cisco. But then there's the deployment people out there. And if you like Cisco and you see the runway for the 5G deployment, that is, and it's just starting. The deployment people out there are really, it comes down to two, Ericsson and Nokia. And I'd recommend if you own Cisco, I'd take a look at both Ericsson and Nokia, and especially as they've come down.
They're names from the past, but they're still, because they're not, well, Ericsson doesn't sell, I don't think they sell phones directly to consumers anymore.
No, but like Nokia's business is all about 5G deployment. It's not so much about phones anymore, although they're still pretty big in the emerging markets. But where they've actually got a great leg up recently is that because of the confrontation between the U.S. and China, with all the trade wars and everything, there are a lot of great suppliers on the chip side and also on the deployment side into 5G. But they've locked them out, and so it only leaves, the U.S. and the European supply chain to actually feed that 5G deployment.
Jim in Burlington, Ontario has internet security on his mind. Go ahead, please.
How you doing, fellas?
I'm very good. Thanks for calling.
Can I have your opinion of FireEye, please?
FireEye.
So they try to protect people from malware.
Yeah. I wish I had one of my analysts here. But, I have an analyst of ours. He's in Silicon Valley. His name's Yuri. Yuri is his reputation is actually in the whole cybersecurity side of this. He actually manages the cybersecurity for Alibaba. Isn't that amazing? Here I have an analyst in Silicon Valley who happens to be a Russian, living in Silicon Valley but working for a Chinese company. It just shows you how small this world is becoming. But anyway, as Yuri has taught me, we own a little bit of FireEye, and we sort of spread it around because within that whole sort of malware cybersecurity side of things, there are endpoint people, and that is where FireEye is involved in. We also own another company called Checkpoint. FireEye just reported last night, and it just shows the demand for their product, not just their products, but also their services. So there are a lot of players in there, and you can sort of scatter it. We sort of hold within our portfolio on the cybersecurity side around sort of 3 to 5%, and we just sort of play within that, and FireEye is one of them.
Let's head to Oakville, Ontario. Wilson, go ahead, please.
Thank you for taking my call.
Pleasure.
My question regarding to the Salesforce. The stock from the high probably to now like down 20%, and also the multiple pretty high. What do you think about this stock? Is it a good time to pick up some or not? Thank you.
Yeah. Thanks very much, Wilson. Yes, I would definitely buy it down here. 136, that would take you back to the same price when you go back to this past spring. This is one of the, they're sort of in tandem. Number one on the software as a service is Microsoft. Number two is Salesforce. Benioff would actually claim differently, who's the CEO over there. But yes, I would absolutely add to Salesforce down here. I think when you look out, what it was trading 136, and we have a price target, a 1-year price target of 182.
Mm-hmm. Okay. Let's get on with an email. Pat in Maple, Ontario. Netflix. Does Netflix have good growth prospects despite an overblown PE ratio? Netflix. I mean, that stock's still up pretty sharply this year.
Yeah. We've never owned, you know, I feel like a confession here. We've actually never owned Netflix.
Mm-hmm.
And we're fully invested right now. Would it be a good place? Because this is the you know, the future Disney type company out there. We've always found it very expensive, but it's probably worth a look at right now. Yes.
Okay. Yeah. And okay, I'm not going to. Well, the estimated PE, according to Bloomberg, around 115 times. But of course, it's a subscriber growth story for many investors. We're going to take a break. We're going to have Kim Bolton's top picks right after this. Top pick number 1, Amazon, the shop that sells everything.
You know, Andrew, it was only a month ago that, remember, everyone was talking about that Amazon is the king of the disruptors, and then, you know, it comes off 25%. This is our largest position. It was in the top 5 before, but we added to it down here. Trading at around $15.50 right now. And we still have our price target. I see the price target up there, the analysts. We actually, ours is 21.32. It's trading 15.50.
Mm-hmm.
You know, it got dragged down. We've owned it since we began this fund 6 years ago. And I remember picking it up 5.5 years ago, down at $336. But back then, all the analysts, everyone complained that they had no earnings and they had lots of revenues. And now they're complaining that they have too much earnings and not enough revenues. So we just believe that this is a fantastic opportunity. The company is making the right strategic decisions. It's raising the prices in the segments that it holds competitive strength, like the prime subscription size, but it's cutting prices in the more competitive markets, like in the cloud. And so they have a great balance of business. I just think for your investors, this is a great opportunity for a long-term play with Amazon.
Wow. What a paper loss. I mean, it broke through $1 trillion market cap in early September, and now it's about $780 million.
Isn't that fantastic? $250 billion.
Just whoops. Okay, Visa is your next top pick.
Yeah, Visa is also in our top 5. Trading right now at about 136 US. We have a 138. We have a price target here, a 12-month price target of 164. It's definitely not a value-oriented opportunity, but we truly believe, and you see it not just in technology portfolios, but in very broad portfolios, it's a great stock to have in your portfolio. It has high profit margins, it has significant amounts of free cash flow, stable growth trajectory, and it's been able to deliver capital appreciation, dividend growth. It's been doing routine share buybacks. It's everything that you look for in a growth company. And so we think it's and certainly in this pullback, it's a good opportunity.
And you touched on this earlier, Ericsson, the former, retail phone giant, but now a provider of picks and shovels for 5G.
For 5G. They just reported last week, but then, you know, all the markets around the world have had a haircut over the last week of, you know, anywhere from 5 to 10%. When Ericsson reported last week, and this is on the ADR, it reported, we have a price target of $9.40. And it reported, and it actually got up to $9.20. We actually pared back a little bit, and we just bought it back here. And we say thank you very much, because this is a great opportunity around this sort of 860, 870 side. Again, they are going to be one of the main service and hardware providers for the 5G deployment, which is just happening right now.
So you would stick with that one, eh?
Absolutely.
Okay. Kim, great fun, and thanks very much for the insight.
Thanks, Andrew. Look forward to it.
Kim Bolton has been our guest on Market Call today. Thank you very much indeed for watching. The Encore airs Monday through Friday, 11 p.m. Eastern, 8 o'clock Pacific, and we're live Monday through Friday at 6 p.m. Eastern with Market Call tonight. Get your questions in at any time, night or day. Market Call at bnnbloomberg.ca. Thanks again for watching our show, and we'll be back tomorrow.